This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad. Happy Monday. Hope you all had a great long weekend. If you're in the U.S., hope you had a safe and happy July 4th. If you're still on vacation, screw you. We're all jealous. But let's just, for a second, recognize the crazy, horrific news in Texas with those floods. I can't really even imagine in the middle of the night having 20 plus inches of basically a river coming into your neighborhood. So I hope that local and federal government can help as quickly as they can. My wife and I are trying to contribute through company match through her employer, and we hope that if you are any way impacted in Texas, that you are out of harm's way and your family is safe. I wanted to talk today a little bit about AI. Just pivoting back to the market. Tomorrow is the start of Prime Day, and I was reading that Amazon has over 1 million robots at their warehouses, and for every one robot, that's replacing potentially 10 humans today and thousands of humans into the future if we make it that far. So yes, I think automation is needed in some respects. And I feel like the genie's out of the bag, right? It's like the television has been invented, and all of us who are employed by radio are trying to latch onto radio, hoping not to be displaced by television. Similarly to what the internet did for a lot of folks for e-commerce. But I feel like the genie is out of the bottle. There's almost like no going back. So I think, being the cynic that I am, we all have to just kind of pivot and recognize that these masters of the universe that control all of the capital and political will, not just in the US, but around the world, will push toward this future that we never asked for. And we'll just have to retool ourselves and our families and our children as they grow up into vocations and careers that they can still provide for themselves and their family in this new future that someone else is imposing. And if you think about it lightheartedly, if I told you or your partner that I can replace your partner with an AI humanoid robot that looks and feels like a humanoid, that looks like Ryan Gosling or Michael B. Jordan or Margot Robbie, or replace the blank with whoever your dream physical partner could potentially be. And not only do they look and feel like that and talk like that, they show empathy. They can be rented out like a Tesla Model S for ride shares, for other things. Cleaning your house. And they'll pleasure you on demand whenever you want. Would your partner fire you today? Like break up with you or leave you? And not have to deal with RBS all the time. So, look, in 50 years, we might be heading there. And as you all work in your jobs and enter data into your CRM, success management platform, your reports, your phones, your laptops, training these AIs. Just know you are training your replacement. Before I jump in, tomorrow is the start of Amazon Prime Day. Look, I don't want to get all holy on you all, but I am only buying stuff that I normally would have bought anyway. I delayed my purchases as long as I can, whether it's, I don't know, dishwasher pods, right? Like things like that, toothpaste. I'm only ordering stuff like that this week because I'm trying to stick it to the man, Jeff Bezos, like he really gives a crap. I'm trying to reduce any discretionary purchases this week. I do not want Amazon to profit off of this Amazon Prime Day more than they would have anyway. With that said, one last bit of housekeeping. Tonight, New York time midnight is the end of the discount promotion. Many people have signed up. Thank you. Welcome aboard. Please do not ignore the onboarding prerequisite podcast and links. Those will exponentially help you gain more value from your paid subscription. If you can't afford to upgrade on the discount, I totally understand. Please stay as a free subscriber. I still will be offering like 4 to 5 minutes every day for free on this podcast, so you can kind of get a sense of what happened on Wall Street without politics, advertising, sponsorships, etc. Just your good old neighborhood Spider-Man and my own rants and advertisements. So moving forward, let's see. Well, I should say moving backward because it's backward looking. It's 3:40 New York time as I'm recording this. So if the closing numbers change a little bit, forgive me. But for breadth, we had 357 new highs versus 78 new lows, 19% advanced versus 79% declined on the NYSE. 25% of stocks were below the 50-day moving average, and 42% were below the 200-day moving average. Now, if you take a look at the headline numbers, it's not pretty. And there's sure like some hemming and hawing and whys, but the Dow down 536 points or 1.2%. The NASDAQ down 209 points, down 1%. The S&P also down 60 points or about 1%. Every single Mag 7 is red except for Meta as I speak. Meta is up 0.25% right now. Palantir is actually doing pretty well today, up 2.6%. There's a few others sticking their necks out to the green, and I'll cover those in a minute. But taking a quick look at the sectors, every sector is red. The biggest loser today is energy, down 1.5%. Consumer cyclical, down 1.3%. Financials are down 1.25%. Technology down 1%. Real estate and healthcare down 1%. Basic materials down 0.93%. Industrials 0.8%. Communication services down 0.75%. So these are all bad numbers. The only positive that I can spin here is that volume is still actually low. I don't know if that's just hangover from people traveling over the break, but at 3 p.m., the SPY traded about 51 million shares on a declining daily average of 76 million. So that tells me that today's action, while bearish, is not panicky. Because typically what we've seen is low volume green days and heavy volume equals bad selling days. So I can't tell you for sure if this is the beginning of a sell-off or if this is just a one-day anomaly after last week's options expiry and people traveling, rebalancing of July portfolios after the end of June. We'll have to see. So a few more sessions are needed. I need to see more data before I make that decision. But if folks want to know why we're having some negative action today, it's a homologation of politics. It's a homologation of tariffs. They were supposed to end this week, by the way, the pause, but they got pushed to August 1. It's also, for Tesla, they're having a really bad day. It's, Musk over the break saying they're going to start a new political party to combat both the Democrats and the Republicans. So just a lot of headline risk. Apologies for if you hear the fire trucks in New York City. Just the way of life. I almost don't recognize it anymore. So there's just a lot of headline risk going on right now, and nothing's really changed in the Middle East as far as a ceasefire. So we'll see what happens this week, but I suspect some volatility creeping up here. Taking a quick look at the profitable companies in the NASDAQ that made new highs. There were about 11 today, including names like SoFi and Wynn Resorts. In the S&P, you had Tractor Supply Company up 3.8%, Palantir 2.8%, DoorDash 2.7%, Uber 2.3%, and Tapestry 2.25%. In the NASDAQ, you had these are all duplicates, Palantir and DoorDash again. To the downside in the S&P, this list is longer. Tesla, these are all percents. Over 6% for Solar, 5.1%, Lululemon, 4.3%, Texas Pacific Land Trust, 4.2%, Baxter International, 4%, on Semiconductor, 3.9%, Dow Chemical, 3.8%, Bungie, 3.6%, Albemarle, 3.6%, Old Dominion Freight, 3.4%, Progressive Insurance, 3.4%, Biotechne, 3.4%, EOG Resources, 3.3%, Chipotle Mexican Grill, 3.2%, Halliburton, 3.1%. In the NASDAQ 100, you had Tesla again, you had ARM Holdings down 5.8%, Marvell 4.5%, Lululemon 4.3%, on Semiconductor again, Old Dominion Freight 3.4% again. So that's kind of the rough summary. Before I jump into the premium content for paid subscribers, just a quick last reminder. You have about 8 hours to go before that discount ends. If you're in a car listening to this on the road, you can quickly access that discount at notyouradvisor.com/4 T as in Tom and H as in Harry. So fourth, notyouradvisor.com/4th.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.